Welcome to The Business. I'm Rachel Papazoni, coming to you from Kalgoorlie in Western Australia, where the 30th Annual Diggers and Dealers Conference is underway. This week we'll delve a little deeper into the future of mining, plus plenty more. Coming up on tonight's program, Crown casualties. Casino executives step down and Victoria overhauls its gambling regulator ahead of damning Royal Commission findings.
Well, I think Crown's fate really hangs in the balance.
And all that glitters is not green. Can gold hold its value as the world looks to decarbonise?
But globally, it is absolutely known as that safe haven. I do not believe that any cryptocurrency will displace gold as that asset.
First up, Crown Resorts has confirmed its chairman Helen Coonan and the chief executive of its Melbourne casino Xavier Walsh will both step down this month. The announcements came on the final day of hearings at the Victorian Royal Commission, as the state government said it was splitting up the liquor and gaming regulator, which failed to stop criminal activity at the casino. Daniel Ziffer reports.
Crown's chair, Helen Coonan, will be gone by the end of the month. So too, the boss of its Melbourne casino, after both were singled out as not being fit to reform the company.
I think Crown's fate really hangs in the balance.
On the final day of hearings at the Victorian Royal Commission, the company's lawyer made an astonishing admission.
And Crown accepts that it is open for this commission to conclude on the evidence that Crown Melbourne is not a presently suitable person to hold the casino licence.
New South Wales found Crown unfit to hold a licence. Its licence in Victoria is in jeopardy.
You can commit wrong for a decade of various kinds and come along and say, well, we've fixed it, so don't worry about it.
The Commission heard explosive allegations of criminal activity, including how the casino underpaid tax for almost a decade.
Crown has learned a lesson.
The casino giant shortchanged the state government of $61 million. They've repaid it, but the figure could rise to $500 million.
A fairly terrible litany of poor behaviour, inappropriate behaviour, probably illegal behaviour in many cases.
Commissioner Ray Finkelstein QC compared it to a car thief turning up to court and promising not to steal again.
We don't submit, don't worry about it, I've fixed it. We don't even submit that it's all fixed yet.
The choice might be between you running the casino and somebody else running the casino.
Yes.
The Victorian government has announced its regulator will be split in two, one looking after hotels, the other gambling.
Undoing pretty much the failed experiment of the past that put in liquor with gaming regulation.
The future for Crown is looking more and more uncertain. Takeover bids from Blackstone and Star Entertainment have failed.
Any potential suitor will want to see what comes out of these royal commissions to know exactly what the landscape is in Australia. Whether or not that delays any acquisition remains to be seen.
Crown's value is in holding licences to run casinos. New South Wales said no. Western Australia has an ongoing inquiry, and Victoria no longer looks like a safe bet. The company will need to turn the tables to have a viable future.
Daniel Ziffer reporting there. BHP has approved a major expansion at its nickel mine here in Western Australia as the demand for critical battery metals ramps up. BHP Nickel West will increase capacity at its Mount Keith processing plant by up to 50% during the next decade. It comes off the back of the miners' deal to supply the world's largest maker of electric vehicles and battery storage systems, Tesla, with its nickel.
The opportunity to grow is real, as demand for future-facing commodities like nickel is likely to get only stronger. We have positioned ourselves for the future, becoming a globally significant supplier to the battery sector and laying the foundations to create a sustainable business of scale. We believe that 2020 was an inflection point with a record 3.2 million vehicles sold globally. This represents 4.3% of all light-duty vehicles, a 44% increase despite the global pandemic. Quite a remarkable result. The commitment and intention of governments and car manufacturers for the future is evident. Many governments are committing to decarbonise their economies more rapidly and making it very clear that there will be an end date for combustion engines.
BHP predicts demand for nickel will grow by more than 500% during the next decade. As the world pushes forward with new technologies and the materials needed to power them, the owner of one of the biggest open-cut gold mines in the world says gold will continue to shine. To survive, traditional mining needs to address the twin challenges of supporting the decarbonisation of the globe and how to address environmental, social and governance concerns. Northern Star owns the Super Pit. I sat down with Managing Director Stuart Tonkin here in Kalgoorlie. Stuart Tonkin, welcome to the program.
Thank you, Rachel.
Stuart, the Diggers and Dealers Conference started 30 years ago, very much focused on gold mining, but we've seen, I guess, a lot of transition, particularly with the conference this week talking about critical metals for batteries. You're obviously a big player in the gold space, but do you think maybe it's lost its shine now?
Oh, look, I still think gold shines the brightest, but I think it's really encouraging for a lot of the other commodities to also have benefits in this cycle, particularly here for the city of Kalgoorlie-Boulder, that diversified input into the state economy. It is really good to see, and you see nickel, lithium, booming in the region. It's actually a really good outcome.
Also, I guess, a lot of conversation about ESG concerns as well as I guess, from one point of view, the globe is sort of turning towards decarbonisation, but also there's demand, I guess, from shareholders and from the community. What is Northern Star doing to address those kind of concerns?
Yeah, so you'll see a lot of companies looking to greenhouse gas emission reduction. We know that 70% is from our power generation, so we're working on identifying renewable energy projects to then displace that greenhouse gas emission power generation. They're some of the first things, but the public commitments to do net zero by 2050, Northern Star has made, and we'll update annually in our sustainability report the progress against that.
Gold prices are quite elevated. They've come off their pandemic highs. Do you still see gold as being, I guess, a critical measure for the global economy and that safe haven that it has so traditionally been?
Yeah, look, I'd still recognise that it is still very, very high. And therefore margins are still very strong for a lot of gold businesses. Yes, it's certainly come off a peak. In the last 12 months, gold equities have retraced some of their gains in recent times. But what's also important is the mine life, the reinvestment in drilling and extension to the mine lives with gold players. You're actually seeing the reserves and resources, particularly with Northern Star, build out and show that reserve. But globally, it is absolutely known as that safe haven. I do not believe that any cryptocurrency will displace gold as that asset, and I do think there's a lot of things to play out as some of the benefits that have been provided through the year of COVID in investment into countries, as that subsides, people potentially will come back to this investment space.
COVID has presented some challenges, particularly in WA with the hard border and the international border that Australia has. Has that provided some labour shortages for Northern Star?
Yeah, we're not reliant heavily on fly-in, fly-out or inter-border movements. There is some specialist skills that you are restricted on, but it absolutely has made you focus on retaining and working with the teams in front of you. And I think people have become innovative in how they ensure supply chains stay open and how they can attract and retain their key talent to work within those boundaries. But it's certainly been an interesting year to have to manage through, and we're very pleased that we're able to keep our businesses and our communities safe throughout the last year.
And the resources sector has done exceptionally well throughout COVID, I guess, because it has been on the forefront. A lot of workers, for example, getting COVID tested regularly, that kind of thing. What's your view on vaccinations and whether there should be some kind of mandatory element for the resources sector to ensure it can continue?
Yeah, look, we absolutely encourage all of our staff to take up the vaccinations, particularly in the US, where it's prevalent throughout Alaska. and we've had a very, very good uptake in that regard. I think it is difficult to mandate in regard to people's personal choices or health issues, but we will make sure it's easy, and we encourage and educate people to take up the vaccinations. I'm fully vaccinated in preparation for travel to Alaska, so I think the resource sector absolutely has to lead the charge there. I think importantly, we do not want to take away vaccinations from other communities potentially more vulnerable. So I think the resource sector needs to just make sure that they're in line with what the general supply demand is for those vaccinations.
We talked earlier, I guess, about the gold price. We've also seen record iron ore prices, lithium, nickel, copper, I mean, you name it. Do you think that we're in a commodity super cycle?
I think there are fundamentals as to why those prices are up. We're absolutely in a cycle which is potentially, even in gold, not seen before. But the question with the cycle is, does it fall away? And I don't think there's any fundamentals, whether it's in lithium demand, in the electrification of vehicles, or even the supply of steel ultimately into construction. With the iron ore prices, I don't see that those fundamentals will fall away. It may come off peak prices, but it's still going to stay up there for a while.
Stuart Tonkin, it's great to be able to speak to you in Kalgoorlie. Thank you.
Thank you, Rachel.
The Reserve Bank has left interest rates and its current stimulus plans unchanged, despite the extension of lockdowns in both Greater Sydney and Queensland. The cash rate remains at 0.1%, with bond purchases continuing at $5 billion a week until they drop to $4 billion a week in September, as flagged at last month's meeting. In his post-meeting statement, Governor Philip Lowe said the economic recovery in Australia has been stronger than was earlier expected. The recent outbreaks of the virus are, however, interrupting the recovery, and GDP is expected to decline in the September quarter. The experience to date has been that once virus outbreaks are contained, the economy bounces back quickly. The interest rate decision kept the broader market subdued into the afternoon, and the All Ordinaries and the ASX 200 both ended slightly lower for the day, and the Aussie dollar is higher against the major currencies. Qantas will stand down 2,500 workers in response to Sydney's extended lockdown. It comes after the federal government announced a new bailout package for airlines, with Virgin and Rex still waiting on further detail before making any decisions. Rihanna Whitson reports.
Grounded planes due to COVID border closures and Groundhog Day for Qantas workers.
We've had to make the difficult decision to temporarily stand down around 2,500 Qantas and Jetstar employees who work in our domestic operations.
The affected Qantas frontline staff, including pilots and cabin crew, will be stood down without pay. Those in lockdown areas will need to apply to Centrelink for the regular coronavirus support payments. Employees who live elsewhere will receive a new $750 a week federal government support payment for aviation workers,
which we will pass directly on to those individuals that are stood down.
There are concerns staff like baggage handlers could miss out altogether.
There'd be well in excess of 10 or 12,000 workers that have fallen into a hole here, a black hole.
Unions say the support package adds to the $1.6 billion taxpayers have already spent on keeping Qantas afloat.
The tourism industry is affected. The support should be available to all workers affected. And this is true beyond tourism. This is why we need JobKeeper 2.
Qantas says the staff should be stood down for about 2 months and isn't expecting any further job losses. However, that depends on how long these lockdowns last and when states reopen borders.
There's a lot of uncertainty out there on that.
An industry's future that's up in the air.
Rihanna Whitson there. And that's all from the business from Kalgoorlie. For more on those stories, head on to the ABC News website and click on the business page. And you can catch the program anytime on iView. I'm Rachel Papazoni. Thanks for watching.